results now, this time it's Tsogo Sun. Their numbers came out earlier today. Have a look at this. Income of 9.9 billion rand, that was up 10%. EBITDA up 11% to 3.9 billion. Adjusted earnings up 24%. Adjusted headline earnings per share also up 24%. And also a final dividend per share of 51 cents. And that's up 28%. On the telephone now is the CEO of Tsogo Sun, and that is Marcel von Aulock. Very, very gratifying numbers, because you say, Marcel, that you've benefited from both organic growth, which is good, and also expansion policies. Maybe tell us about the organic growth first of all.
Thanks, Lindsay. Yeah, we had a pretty good year. I mean, gaming win was up around 7%, which is a little bit slow. We would have liked a better number than that. But our hotel revenues and our food and beverage revenues were up 19 or 20% on hotels and 16% on food and beverage in the year, which was nice.
Is that coming off a low base, though?
It is. There's definitely a recovery in the hotel
I was going to say
business.
that.
We've seen our occupancies move from 60% up to about 64%. So there's a recovery coming through from the very depressed conditions. Certainly 2 years ago, we were in the high 50s.
Has it been across the board, geography-wise? Because I know that Johannesburg has been far more buoyant when it comes to the hotel business than, for example, the Western Cape. And I know it's seasonal as well. But has it been a good, strong growth across the board? Yeah,
we've seen it pretty much everywhere. You know, our hotels are very city-based, corporate-type hotels, and all three of the main metropolises, Durban, Cape Town, and Joburg, have shown recovery. We've also shown quite a strong recovery in the secondary areas. So your Mpumalanga regions. The sort of outlying properties have done pretty well over the last year.
It's quite interesting, isn't it? Because the South African economy at best can be described as sort of just ticking along, and yet you're showing something completely different. And I would have thought that if the economy is under a bit of pressure, then the business traveller doesn't travel as much.
Certainly the case in 2009, 2010, the business travel contracted substantially. So we're recovering from a low base, and that helps the hotel business. In the gaming business, where we've had growth of 7% in casino win, it really talks to the fact that we cater to the largely upper LSM market, which is more insulated than the lower LSM market. So, I mean, when you look at our results, it's the complete opposite of what some of the unsecured lending people have had. Although we still face a consumer, we tend to deal with the wealthier consumer who aren't as impacted.
I was going to ask you that actually about the unsecured loan side of things, but you've answered that question. So you're not so exposed. So the high-end people, the people that shop at, for example, Woolworths, and I always use this example because when I speak to Woolworths, they say, yeah, the consumer's under pressure, but not ours, not as much, not our consumer, not our LSM group, and that's the same for you, obviously.
Absolutely the same, yeah. It's a high LSM market, particularly casino gaming. We tend to be in the wealthy areas, and we're just not as effective, which is why it's pretty insular on the downturn too, because it's not a terribly expensive form of entertainment for that market, so it's pretty consistent all the way through. As I say, we had 7% growth. I would have liked stronger, but sometimes the punter wins.
Sorry to interrupt. Which is the shining star of yours? Is it still Monte Casino? Is that still the one that really shines?
Yeah.
Okay. And what about the Western Cape? Because you're keeping a close eye on that.
Yeah, there's an opportunity for relocation of a license there, with the exclusivity of Grand West expiring. It's likely to be a long, drawn-out process, but we're keeping a very close watch on that, and then we'll bid for new licenses where we can. But obviously the license numbers in the country are limited. So one of the key expansion projects we've undertaken is to say we can make our existing operations bigger. If you can't get new licenses, make do with what you've got and make them bigger and more attractive, which we've started.
And you've also been doing that because I spoke about the organic growth, but also you've been expanding your operations, spending an awful lot of money. Is that starting to come to fruition now? I mean, the benefits.
Well, we've only just started. You know, we announced a couple of weeks ago that we had agreement to increase our capacity in Gauteng by around 30%. That's going to take a while to roll out. We're busy construction work on Silver Star at the moment, which is a 500 million odd project. That's going to take a year and a half or so to finish. But it's a medium-term game, but it certainly makes sense to us to try and expand each of these operations and try and get more out of the markets we're in.
If you were speaking to a group of investors now, Marcel, would you say to them that Tsogo Sun has some defensive qualities as well as a little bit of growth potential as well? Yeah,
I mean, our market is not under as much pressure as the balance of the market, so we're still pretty confident about the ability to grow. I mean, you can never forecast for sure, but we're feeling quite comfortable. And the other thing that we've got is very low debt levels. So our debt is below 1 times EBITDA. We're generating about 2 billion a year in free cash flow. So we getting a lot of opportunities coming along where essentially we're the only one in town with money, and that helps. It's a kind of a harvesting time, and then when the market really turns stronger at some point in the future, we think we'll be very well placed.